start sharing the screen. So, well, my chart's gonna look a little funky. Actually, we turn off execution labels and whatnot. Alright, I'm going to, I don't really care about that or that. Alright, cool. Guess I can get rid of, that's a 2 standard deviation. Actually, that's important. Alright, so let's go over this. So the assignment verbatim was, let me see, figure it out. Must find where each week in the last 3 weeks, including this one, where does the market rotate before coming back up and continuing to stay delivery higher? So obviously, the last couple of weeks, we're just popping on weekly. You know, prices be going up. But the idea of it was for these 3 weeks. Where is my vertical line? Here you are. So not this week. This week. This week. This week. Where do we reverse? Where do we go down into? And figure it out. So I guess I will go over the obvious one first. I don't know. I gotta check. Let me check Cassie. Hey, alright, you were looking at the 4 hour. 4 hour. 4 hour, 4 hour. You have one in 1 day. Okay, cool. So I think the most obvious one was this 1 hour fair value, or 1 week fair value gap. Or you just call it the weekly fair value gap. Right here. Oh, I did my lower time frame fair value gap. That's how I do these. I have different templates for different time frame. So it will show up on, say, only the weekly. So I don't want to clutter my weekly chart with a bunch of low time frame stuff. So actually I gotta just do this. Or not. I haven't done this. Middle line. Boom. Alright, cool. So this is a weekly fair value gap. And we can see that the consequent encouragement, the middle line of this fair value gap, was the bottom of the week of the 29th. I mean, it's pretty damn close. That's, I mean, if you're talking about, because we try to stress high time frame levels as they're important, you know, they're the most important levels. They're going to be stressed upon more than a 15-minute level. So this right here, I mean, if you took a trade off the CE of this weekly fair value gap, you only took 10 points of drawdown. For a high time frame level, that is as close to a bottom as you're gonna get. You're not gonna get perfect bottoms on most of the time, but this is as close as you can get. And then obviously, imagine if you took a trade right here, and then where it closed, it would have been, 400 points. But I don't trade like that. I know people do, but like that's not me. But that is probably the most obvious answer for the week of the 29th. It's literally this weekly fair value gap. It was formed through the bottom of one of the weeks we have to analyze, but we can figure out what happened with this one. We can hop on a daily chart or an hourly chart or whatnot. So we can see that price respected the CE of this fair value gap, because we know that wicks do the damage and bodies tell the story, right? So the wick went down to the CE and the body closed well above that fair value gap. So if you're looking at that, you're looking at the weekly, and you saw this, you're like, okay, next week's going to be bullish. I'm long biased now. I want to look for long opportunities, wherever that may be. So obviously, next week we went up 2%. So that was all. If you saw this weekly fair value gap with the CE, if you guys don't have the CE marked on your fair value gaps, if you use the rectangle, I see Cassie use the you just use a fib, which is honestly just fine too. Like the fibs aren't bad because they kind of show you. I used to use fibs for fair value gaps, but if you use rectangle and you need the CE the middle line. Just go to, you click the thing, click the rectangle, hit the options, and then just hit middle line. That's it. That's the consequent encouragement. Mean threshold also in certain scenarios, like if it's an order block or whatever, but because like this is a gap, fair value gap. So it's a consequent encouragement. It's the same thing. It's just two different terms, but you'll learn. But the 50% of a lot of things is a good idea of determining bias and how price is respecting arrays. So that was obvious. Go down to the daily now. Actually, I want to mark down. We got a sticky note because I don't even know the specific weeks. No, that's the note somewhere. And a pen. All right, first week we're analyzing is. Oh, that's my ES. 122.24. And then 129.24 is already done. That was the most obvious one. And then 2.5.24. Alright, cool. Now we go down. Let's do this. So we will start with the 22nd. This is the January. Where's the 22nd? Alright. So here is that same weekly fair value gap. This box right here. It's the yellow one. The orange one is a daily. I kind of try to separate the boxes because if I'm looking at it, I just know the difference. So this is our weekly. This is the daily in the same point. But we know price is fractal, so right. The same data you see on the weekly, you're gonna see the same data on the daily, the same data on the 4 hour, the same data on the 15, right? Just the candles represent different time frames instead of just changing data completely. That's important. That's one of the other reasons why we did this assignment. Is just understanding price is fractal, so these levels are respected on all time frames. It shows that there are different fair value gaps formed in the same price area, right? So I could probably just get rid of this guy. Boom. Just to eliminate confusion. So we can see that, so this is the 23rd. We go down. So this is the candle that forms that weekly fair value gap. So that's not the answer to this question. So like, oh yeah, it goes down to the weekly fair value gap. No. That's the one that forms it. You could say it went down into the daily, which wouldn't be bad, but you want to see if there are specific levels that might have within this little box right here that may have shown you better idea of where it's going. So I'm gonna hop down to 1 hour. Now this is where my charts kind of get a lot, and where I wish I had this is where I wish I had good old TradingView Plus. I still trade with the free version of TradingView. I don't pay for it. I mean, I do plenty fine with the free version. I don't use indicators. I mean, I use two indicators. I use the one that automatically maps fair value gaps, which is nice during the day when I like during work and everything when I can't mark every single fair value gap that forms. This marks it automatically. It works. Sometimes it'll mark it before it even forms, which is obviously not how that works. But yeah, and then I have another one from the guys at Ace or Mamba on our server. He made this, so it marks liquidity, so highs and lows, and it automatically marks new week opening gap, which is something that I don't know if any of you guys know. I will teach you guys new week opening gap. It's damn good. It works very well. I'm not going to do that right now. I don't care. Actually, unless it was something that was nope. Wasn't something that was respected. Okay, so here's the same bottom, right? We can see that we had a bullish week last week, or this is not last week, but in the time in the lens of we're looking at 122. that last week was very bullish, obviously. I mean, I took some trades here going long. So that's what you're obviously bullish bias going into this. So you're like, oh, what am I going to do? You know, my first idea is like, oh, I'm looking into OTE, right? Maybe I can go here, maybe go here. Kind of like this one, right? It's like the C of that daily fair value gap lining up with that 705. I'm like, oh, okay. And then you got like a smaller, you got an hourly one. I'm like, okay, that's a good level for me that I'm watching. But obviously we didn't respect. We never went back down there. This price is so strong, we never respected any of these, because usually you will respect the top most. Like in this case, we have a lot of fair value gaps. The top most fair value gap going right here. This little guy right here. Obviously, we didn't really. I mean, he was respected at some point. You can see price consolidate. Get rid of this and this. Actually, this one's probably going to be important. But you can see that inverted fair value gaps still are important, right? You have this fair value gap right here on the hourly. You can see how wicks going above it, but the bodies are closing below it, right? So we go below it, we break through it. It's the same idea. Support becomes resistance, resistance becomes support. That concept never changes. It's literally the idea of inverted fair value gaps. This was a BISI, so you're expecting price to pull back into it and then bounce and go out of it, but when it goes right through it and then retests it, you're expecting it to hold as resistance, which it does, which is when you saw this big candle right here, this 42-point candle down, which obviously wasn't the bottom of the week. Bottom of the week was some sort of news, it looks like, which is a Tuesday, January 23rd. Yeah, that was some sort of news. I forgot which news that was. It deletes the calendar. So I'm gonna figure it out. I could just look at the calendars back there. But we can also look at this fair value gap right here, because obviously this was close. So it pushed down into this 1 hour fair value gap at 2 p.m. Because if we're looking at the lows here, I'm gonna go down to 15. It always does this. Here you are. Wonderful. All right. So I immediately look at this level over here. It's a bunch of order blocks. All right. I mean, hell, you'd be looking at this one right here, be like, ooh, propulsion block. Depending on how you judge your order blocks. So if you hear my dog barking. Depending on how you do it, I would say this is a good idea right here. Obviously, you could see how price is respecting the mean threshold of this propulsion block once it goes back and down and retests it. Right, so that's an idea, got this propulsion block. But we're looking at, like, what exactly would this little level go to, right? That's a big wick. That's at 9:30. That's at market open. You know, what happened when price went all the way down here and then just saw that big wick formed? So we've identified one level, this propulsion block right here, because it digs into this other order block. Another order block. Small, but it is there. But that's not really the bottom. But price, as we showed on the 1 hour, you know, things are pretty damn good when it comes to being exact. You'll find if you're looking at this, but like obviously like this mean threshold is pretty close. But if it's like a couple points off from, like, if it goes below the array but it still respects it, then that's still a good array. So that's something to keep in mind. So this level right here, what are we looking at? Let's go down to the 5-minute. Oops. So more of the same. you could say this is like a, I don't want to call it a balanced price range. It could be a balanced price range. I'm not really that great with balanced price ranges. That's more of a tracks thing. But you know, more or less, you could say this propulsion block on the 15-minute could have been the basis of your idea. With this daily fair value gap, it dug into, or this is the hourly. This is the daily. This is the hourly. It dug into that hourly fair value gap and respected it. So that could have been a trade, but you would have had to take 19 points of drawdown. Which would have been, I take 20. It would have been very close. But that's why it's important to keep in mind certain things. I mean, I probably wouldn't have entered that trade based off of this 5-minute count. I mean, you move 67 points in 5 minutes down. I'm more often than not, I am not entering in that trade at all, right? Because that's a big displacement leg down. So we had that propulsion block that we respected, obviously, and then later wicks go down to the mean threshold of it. We had that daily fair value gap, that hourly fair value gap that was pushed into, respected. We didn't quite get into the consequent encouragement of that purple line right there, because price ended up being strong, obviously, because we go up like this. So that's important to know. You know, if price doesn't go down to respect the consequent encouragement, then more times than not, it's very strong in that direction that you're looking at. In this case, bullish. So it doesn't go down. It goes back up, back down into this mean threshold, this propulsion block, and then we continue up, and then we go up and whatever. So that's like one of the answers. I could be missing something. And that's the glory of the market. Everyone looks at the market differently, right? My point of view is different than others' point of view, right? So, you know, Track might look at this and look at it differently. Like Adam Oscar, let me see what he said for this one. 122, 126. He said, oh, actually, that's a good VIM. That's right. Right, he said that really good VIM. And where did my price go? It's a 1 week VIM. So it's a volume imbalance. It's known as a volume imbalance. What the? Why is his? Oh, he might be trading with. Yeah, he's with E-mini Nasdaq futures. I'm on MNQ. All right. So volume imbalances are when. Here, let me just go on NQH, because that was a really good. That was really good by him. 1 week VIM. So if it's MNQ, it's micros. So micros, I have in MLupe notes, I broke it down to what it is. It's all about, oh, you know it, like, good ideas. You've already traded like lots in Forex, right? So the smaller the lots, the smaller the risk and everything. Same idea with MNQ. So micros, it's a tenth of a mini contract. So this NQH 2024 is a mini. If I go MNQH24, it's a micro. So it's a tenth. So, you know, I can be on a $2,000 account and I would have enough leverage to trade MNQ, but no way on NQ. That makes sense. Actually, I gotta feel. Yeah, I don't know why this chart is different. Because there's a small little VIM. Alright, cool. Actually, there it is. I just gotta really zoom in. So, volume imbalance. So, in theory, price should, each candle should be, all right, the close price here is 17,462.75. So in theory, the next candle should be opening price at 17,462.75. But we get a volume imbalance when we see price leave a gap almost. Like you'll see it's like a little gap. I'll really zoom in here. Whoops. Let's see if it left the one admin queue. Yeah, it did. Yep. See. It leaves a little gap. This could be also the new week opening gap. It's different on this. So here, just go to. So if you're looking at it, here I'll go. It's honestly VIMs are better explained on lower time frames. High time frame VIMs are important because most of the time they will get, you'll see a pullback to see them get filled in. But we could try to find one in today's price action. Usually small, and see like how most of these candles, right, close open, right. Most of the time you're not going to see anything like that. It's probably easier in the 1 minute. You can find a ton of volume imbalances in the 1 minute, but if you see one in a higher time frame, that means it's more significant. It means by the time that price closed and the price opened, the the algorithm wasn't able to see. I wish I'm Track knows these definitions by heart. It's almost like price. It leaves a gap of orders that we never were offered. It's a volume imbalance. So people say had orders in, and because bullish order flow doesn't, like in our theory, right? In our theory of the algorithm or whatever, when you're following ICT, other models and everything, or other ideas say, the bullish order flow or all this, but we believe in the algorithm, so bullish order flow doesn't exist in the algorithm. But I'll show you. I'll try to find one because the 1 minute usually has a good one. Oh yeah, wonderful. So look at that. See this little guy right here, this volume imbalance. It usually represents some sort of. If I see volume imbalance, I'm like, all right, this is good for me in the direction I'm looking at, right? So I'm marking this little VIM. So 2 VIMs in a row in a 1 minute, right? That's usually good. But you can't just rely on a 1 minute VIM. Obviously, like there's a VIM right here, it was a decent one, but then we kept on going up. But then we had a damn close candle. It's like it's something that if it's good. VIMs are good. They're good to understand. I don't really look into them. I found them to be important when I'm trading, because if I see VIMs in the opposite direction that I'm looking at, like say I'm long and I see these 2 VIMs in a row. I'm looking at longs, and I'm like, okay, 2 VIMs in a row, and the 1 minute just opened up. But then obviously you can't look at that. You can't like make your trades based off of that. You have to have trades and other bias and everything. So that's the idea of it. If you have a gap between your close and your open of the next candle, that's the volume imbalance. All right, so that's your volume imbalance. So I won't go too far into that because that's a whole other thing, and I'm not really too knowledgeable on volume imbalances. They're not my bread and butter or anything like that. So I don't feel like I'm educated enough to really teach you on volume imbalances, other than the fact like I know how to spot them, and I know how to kind of know how to trade them, which I don't trade them. So I'll go back to this because we're already 24 minutes in, so I want to get this last one done, and then you guys got any questions, we can just get through that. All right, week of 2-5. Here we are. All right, so we're looking at this level over here. So as we can see, we had some sort of an immediate rebalance here, right? Because we had this wick down that prevented us from forming a daily fair value gap, right? Because if you didn't have that wick, you would have seen a fair value gap like right here or something, right? But we had that wick down that blocked us from forming the fair value gap, but then the price went back up. That's known as an immediate rebalance. So that's not the strongest immediate rebalance because you still have a big wick on the top, but that is a still, you can note that as an immediate rebalance. We have a big wick down that blocks us from forming the fair value gap, and then we continue back up after doing that. If it's on the daily, then usually it's like, you know, the first half of the week, whatever, you might be bearish. You might go back down to fill that fair value gap, and then the rest of the week you're going back up or whatnot. Now, that's just a theory or whatever. Some days you have it differently, or some weeks it's different. But usually you could. I found baseline. You gotta make sure you close above the candle that would have been the candle body that would have, and the wick. The previous candle. Pretty much got to close above the previous candle that would have helped you form that fair value gap. That's kind of like, as someone, I do use immediate rebalances. So that's an idea. You could have been like, all right, there was an immediate rebalance. So we seen that, and we expected to be a little bit more bullish biased because that's how we ended the week last week. So now we're going to open up the new week and figure out what's happening here. All right. So no really new week opening gaps here that are important. Let's go down to the hourly. I don't mind the 4 hour, but all right. See, this is when it gets back down to my chart that I wish I had other stuff, because this is when I mark everything up, and because I'm pretty sure did I trade this? No, I did. Yeah, I did trade this. I was going to say, this looks quite familiar. I think this one I didn't really... No, this one I did. This was a good trade, actually. I think I marked this down. I did mark this down. Alright. But anyways, I'm not going to go into that. So, as we can see... Actually, I want to get rid of this, because I don't really care. Get rid of this. I don't really care. We'll go over it like whatever. So we're looking at the 5th and the 6th. We're looking at these wicks over here. So one thing you could have done was marked sell side right over here. People might have sell side. Go back up. Look at 10 o'clock. We had some sort of news during that 10 o'clock hour. All right, it's usually... I forget what happened. There are some news that happened at 10 o'clock. So we got big displacement down. But we end up leaving a wick. Over here, we leave a propulsion block on the 5 minute. I remember this. It was a 5 minute propulsion block that we ended up going back up. So we can see, we can try to figure out over here, like, where we might have seen price stop. And then over here as well. See, I remember I was going, I think I was going short here. Yes, I was. Yeah, I think Ron, I think this was the trade here. When I had that voice chat with you and I was going over that trade, this is the trade that I was looking at, because I was saying, oh, I want to see the sell side, but then I saw price disrespect the 1 minute fair value gap. I was like, all right, I'm getting out of here. But then obviously we went back up, so that's an idea. I remember this now. Yeah, I remember this price action. So I'm a little bit more acquainted with it. Yeah, I got a video on my channel about it, so I go over it. So we're looking for specific points that could have been. Go down to the 30. So the idea of this is, see, I'm just trying to use basic things. See, this fair value gap. This could be a little bit of cherry picking. I'll do something like this. Yeah, I got it right there. Perfect. Look at that. We gotta figure out 7/7. That's the top. Wonderful. Alright. So, you take the low of this, take the high of this. That's a price leg up, right? That's bullish market structure. Low, high, higher low, higher high. Bullish market structure. So I'm looking at bullish market structure. This leg down was the immediate rebalance on the daily on Friday. So I'm looking at that, and I'm looking at this. All right, I want to continue bullish market structure. So I'm looking at the OTE of this leg up. Right, 705, 17557. So here we are. What's up? Oh, it's a leg up. It's a leg up. Yeah. So it's the idea of. I'll just quickly explain OTE. So like the basis of my model is the OTE. I just call it lightning bolt because it looks like a lightning bolt. You go up, you go down, you hit the OTE, and then you continue back up. It looks like a lightning bolt. You're continuing basic market structure, right? That doesn't market structure doesn't go anywhere. You make higher highs, higher lows, higher highs. That's bullish. Lower lows, lower high, lower lows is bearish market structure. That's simple as that. So OTE, you're just looking for the optimal trade entry of continuing those specific market structure, because you want to see a pullback to the 705 level. That's like a really, I mean, I use OTE all the time. It's a really good statistical level where if price goes down there, it's a good chance it's going to go back up and continue market structure, right? So this was an idea. So you could have said this first leg down, the low of the week, went down to this leg up OTE, right? This is Friday. This is the Friday lows and the Friday highs, right? Friday 9:30 lows. It's the Friday 3 p.m. highs. It's the Friday lows and the Friday highs. You put an OT matrix on there, boom, 705. That's a trade right there, which I didn't take. I remember talking about. I think I talked about this, but I don't usually take it because one of my rules is like if there's big displacement downward, like this was a 79 point, and then this would have been 30. This would have been like 60 points. One of my rules, I don't take OTs because usually if you have like big displacements like this, you can't. Actually, I did talk about it the entire time because I literally had a whole discussion on my channel about this because my execution's right here. I entered in right here at 17,557.75, but I exited at right above it. Right, I barely went into it because I said I'm breaking my rules. I can't go in it. Obviously, I would have been done with my week if I held on to it. But then I had the trade the next day. That was good. But so this is something I noted as well. This is one of the points. The OT was the low point of the week of 2/5/24. So you had that idea. Oh, there's an immediate rebalance in the high time frame. Oh, that's a good price leg up, right? Look at that. It's a good price leg up. So I'm looking at OTE. What else are we looking at here? All right, what's within this OTE? Oh, we have this 30-minute fair value gap. We can mark that. So any sort of price that goes into this fair value gap, that just helps us support our idea of OTE. There we go. So that's two levels right there that are good. Obviously, you would have. I wanted to see the sell side liquidity sweep, but we still have this. Do we ever take this sell side? No, we've never taken this sell side. This is still open, which I do expect this to take this at some point. Maybe this week. That could be a target for mine this week, based off of just how market structure's looking. We take the previous week lows. I wouldn't mind that, honestly, because that's the idea of like relative even lows. Right, these are relatively even down here, same here, right? So people are looking at that, it's like, ooh, that's a level I want to buy at. So they want to screw anybody as much as they can. So if people was like, that's a strong level, I'm gonna have my buy order right there, they're gonna get run right through. So that's an idea. That's probably a price target for me this week. So that's pretty much my perception on the assignment. Everybody, like I told you guys, everyone's perception is different. So you guys have any questions? All right, yeah. And if you have any questions when you watch back, you know, like what I'm talking about, just like DM me or whatever. Just let me know. So. All right, cool. Yeah, I'll get that when we end this. I'll just upload the video on the channel. I'll send it in there. Probably it takes like an hour. You know, videos like this it takes like an hour to get up. But yeah, I'll go over. So Cassie, you said you had that fair value gap on the daily, so that was something we did note in here. The 4-hour time frame shows how the price respects the upper bound of the fair value gap at 5003. Oh, you looked at ES. Okay. I look at NQ. I just trade NQ, but obviously ES, NQ, you know, whatever the hell you want to trade. It just all works on it. You know, it doesn't matter what you're looking at. For my idea of, so I look for 50 points a week. So, and on micros, that 50 points a week is literally $100 on the lowest. So I'm looking for $100 a week. Now I have enough money I can do two, so that's $200 a week. So I find that NASDAQ, when it moves, it moves. I've traded both. I traded both S&P and NASDAQ. I think S&P is slightly easier to trade because it doesn't have as wild price swings as NASDAQ does. So if you don't know how to trade these big price swings, which is the basis of my entire strategy, is of the OTE, right? Because, you know, I guarantee people got screwed out on this right here or over here, right? They got screwed. But I prefer those price swings because that's what my models are. That's why I prefer it. But obviously, like, you know, everybody trades differently. Like that, you might be looking for something else entirely, and the ES does that better than the NASDAQ. I know, like I said, I know people who exclusively trade ES. I just prefer the NASDAQ. I've traded both for, you know, years. So it's like whatever. It's something that, like, you know, if you keep on going with this and you get to a point that you do eventually trade, and you're like, okay, but you have to start pressing buttons and feeling like the pressure. That's a whole different story. Right? You feel the pressure of price action and your position and everything. Like that's not fun. But it is fun. Well, it's not supposed to be fun. It's supposed to be like composed and good. This is a business. You have rule-based models and an idea of where you're entering and where you're exiting and all that stuff. You know, you gotta have that. If you don't have any of that, you're just entering in blindly just because, oh, I'm gonna hit the sell button. Can't do that. So, yeah, the idea of you, like, oh yeah, it's respecting the upper bound of that daily fair value gap. Wait, actually, yeah, okay. The one you have marked, the second one, you said it 1 week ago. I think you have the candles marked in the 4 hour that actually form that daily fair value gap, I believe. Like the two blue arrows pointing down. I think that's what forms the daily fair value gap. And you have those marks saying, oh, it respects it. Which is good. You know, you got the idea correctly, but obviously that's the candle that helps form it. Because that's price is fractal, right? So you're looking at the daily candle. You break down that, it's like you're breaking it down in pieces. So then the 4 hour, there's, you know, how many 4 hour candles in a daily candle, right? There's what, 24 hours in a daily candle. So you're looking at that and whatnot. So that's, yeah, so just, yeah, try to keep watch on that. But you have the idea correctly. You could have said that 4 hour, it respects the upper bound of that 4 hour fair value gap on ES. Like, you have one. You probably could have marked. Actually, I'm gonna go on that ESH24 because this is actually you. I think you were really close on it. What is this? 1.8. Yeah. 1.8. There we go. All right. So if you look at this and right here, so you had this daily fair value gap marked. Good. Okay, that's an idea of it. But you go down to the 4 hour. See, this is the candle you have marked. This one right here. That's the one that forms, because that's how price is fractal. Whoops. Price is fractal like that. Right? Because here's the bottom, the daily of this one right here, of this candle. And you have this, and then you have this one right here. Because it's a 3 candle formation. It's 3 candles on the daily, but here I'll put a date range like this. Let's do something like this. One. It's saying 2 bars, even though it's technically 3, but okay, whatever. See, it's just how it is. It doesn't do it great, but it's okay. Do you get, like, that's the idea of price being fractal. So that's something that you'll see more in time, right? Does that make sense on how I'm explaining it? Okay, cool. So that's something that you can note, but a better one that I'm just seeing right here, if we're just gonna go based off fair value gaps, because I'm fine with just sticking with fair value gaps, work just fine. This guy right here, look at that. Look at the consequent encouragement of this guy right here. So we'll draw a little price range. Let's see. What's that? 1.5. That's not bad. Price is respecting the consequent encouragement. It only went 1.5 below the consequent encouragement on the 4 hour, right? There's a 4 hour fair value gap, right? So it's respecting this consequent encouragement, and then price ends up closing at the top of the fair value gap. And the next candle goes right back down into that consequent encouragement, and its low is pinpoint accurate that consequent encouragement of this 4 hour fair value gap. And the same idea, we get a closure above the top. So if you're looking at that, right, you're on the 4 hour. This is what, 6 a.m. and 10 a.m. So this is the AM session, this is the PM session, right? This is AM session, PM session, because this is 4 hours. You're looking at that, you're like, all right, this move is not unexpected at all. This continuous move up is not unexpected. Like, wow, this has been moving up like crazy. But you see price respecting the closest high time frame fair value gap, and you're like, okay, this is good. 4 hour. I don't use the 4 hour. I probably should use the 4 hour more. I mean, everyone has their time frame that they like, whatever. But it shows that's something that is good. And then I guess you can even pull up the consequent encouragement of this guy right here, because wicks are gaps. I don't know if you've heard that from us or ICT, but wicks are ideas of gaps. So you could put a 0.5 fib. That's a consequent encouragement. So you've seen this 4 hour candle, respect the CE. So if you see price go back down into this fair value gap, you can put a 0.5 fib on this wick right here and be like, all right, as long as price closes above this consequent encouragement of this wick, I'm continuously being bullish. And that's what we did. Yeah, sure, it went down a little bit, but that's okay. That's not even a point. It's half a point on ES. Like that's pretty damn accurate. Hell, if anything, you want that half a point, because that means that you're gonna get filled. Because if it's accurate like this one right here, there's a chance you don't get filled. It's happened to me before. That price has gone exactly to my order and I just don't get filled. But that's just how it is. So that's good. So just understand that you were you were really close on it. It's just you misunderstood the idea of price being fractal. So all you had to do was just adjust that fair value gap to the 4 hour. Boom, look at that, beautiful. That's a continuous week. Granted, that wasn't the exact bottom. Like, we were looking more for like, that's the week of the 5th. We're looking for like this guy right here. Right, but that idea of like, oh, price going, it's still the same. It's the idea. Like, I mean, he asked for the exact, like the exact bottoms of the day, but you know, you're still looking. You found an area that price reversed at. It's the same idea no matter what, right? It's just a different place. So, like, I mean, that's fine. So, I think the biggest thing that been shown today is this consequent encouragement of fair value gaps. So it's the 50% mark of it. You know, it's the halfway point. It's the middle point. So if you are expecting price to dig into a fair value gap, you want to see price go down and respect the middle point of it, because like statistically the 50% of something is usually like good. You know, that's a good measuring point of, is this being relied upon or is it not? So the consequent encouragement, break down the word, the name consequent encouragement. So consequent is after, right? Consequent, so this price is going into this fair value gap after it was formed. So consequent. And encouragement, if you see it respect this 50% level, that's encouraging, man. That's a good little pat on your back. Like, oh damn, I'm happy. I'm about to make some money. That's encouraging. I can pay my bills. That's encouraging. Or in this case, so that's the idea of it. Consequent encouragement. It's after, and it's encouraging if it holds. But the idea of consequent encouragement is 50%. So that's something I think, if you're gonna take anything out of this, and if you ever go on the chart yourself, see like if certain fair value gaps, their consequent encouragement is being respected. And hell, if you want to go even farther, go look at fair value gaps that weren't respected. That's a good point that you need to do as well. Go see where ideas were failed, because you need to know both sides. I mean, eventually you trade, you're going to take losses, so you're going to see this, but it's also good to backtest ideas that weren't good. Like, all right, what happened to this fair value gap right here? You know, this little guy. Not every fair value gap is good, as we know. But, you know, it was being respected, consequent encouragement, being respected. But this, you know, this, you know, you can tell me what happened here, type of deal. Like I said, again, not every fair value gap is created equal. You got ICT haters or just fair value gap haters. Like, oh, if you take every single fair value gap, like, not every one of them works. No, they don't. Not every single one of them works. But you have to have some sort of narrative behind it. If you don't have a narrative, then you're not going to have anything, really. You're just going to get, you know, you're just going to get shitted on, more or less. So that's the idea of it. Any more questions on this? No problem. Alright, so it looks like, because you did January 23rd. Okay, so the first screenshot is highlighting on the daily, we see the prevalence of fair value gap and how they influence the market. We first see before our data range price fills back into the bottom. The bullish fair value gap informed Tuesday, December 12th. Okay. See the instance market being pulled down. It's what fair value formed Monday, Second, if the price expands upward, its price goes back down. It rotates upward and onward. So yeah, I mean that makes sense because like well, this is just an NQ, and QH, yeah, NQH. We used to have 3. There you are. Just gonna go on the daily. Look at what you're looking at. December 12th. Oh, because you're looking at this guy over here. Oh. Yeah, you went far back. But, good, doesn't matter. This is a good one. This is a good example. All you gotta do, I'm gonna tell you this right now, I showed you how to add the middle line to your fair value gaps. So what you're gonna do, you're gonna click it, you're gonna hit this, you're gonna hit middle line, and then you're gonna right click the box. You're going to go to template, you're going to hit save as, and you're going to type in whatever template name you want it as, FVG, and then you're going to do that. So then every time you make a fair value gap, you have the consequent encouragement. Because your idea of going into the fair value gap and respecting it is good, but you need that consequent encouragement to really make that idea more structured. Because... yeah, that's what you need. That pretty much. Yeah. So that idea is good. Like yes, you have this daily fair value gap that was good, and then we went over it. I mean the better one in this case was the weekly, right? It was the same price area, right? Same fair value gap. The weekly was better because it was the consequent encouragement was respected almost to a T, but also, that daily fair value gap was good. You could say that price was around the consequent encouragement. Sorry, my brain just went fried. This was the new week opening gap he was talking about. Adam Oscar. Yeah. Okay. So yeah, that makes sense. Just add a C to your fair value gaps. All right. The past 3 weeks, we can see that price rotates down about halfway to the previous candles twice, which is good. First occurrence is Monday 29th of January, goes downward to fair value gap that was recently created, about 50% of the body. Weekly candle that started the week of Tuesday, January 16th. Price rotates out this fair value gap, continues north. Okay, so you said you don't really know like the idea of like a threshold concept. Now that I've explained it, did I answer your question? No. Consequent encouragement of the middle point of an order block is a mean threshold. Consequent encouragement is the middle point of a gap. So if it's a gap, it's like a candle, a fair value gap, it's consequent encouragement. If it's like an order block, then it's not a gap. So the middle point's a mean threshold. I got confused with that in the beginning too. Don't worry about it. Like I didn't really know the difference. So, but just a 50% point. Yeah. Yes. Yeah, it's a consequent. You go back down into it after it was formed. Encouragement, you want to see wicks or bodies respect the consequent encouragement. It can go below it. It doesn't have to go right below, right, like, on it. It can go below it. But, how far below does it go? Does the body close above it? Because the body doesn't close. I mean, in this case, the daily, the body's closed below the consequent encouragement, but then we end up forming a VIM on the daily. But we know on the weekly, the we know in the weekly that consequent encouragement was respected. It was like right here, whatever. So we knew that going into the next day. I guarantee you, people were shorting after that, and they got railed because it was 2% day the next day. So that's the idea of it. So, but it takes time. Like I said, I'm not. You know, as long as you keep on showing up and doing the work, it'll make sense. Yeah. Yeah, I think that's what it is. Yeah, yeah. So I'm on it. So I mean, that's what I did that, you know, similar to like what I just did. I went through each week and we found the bottom of it. One week was the CE of the weekly fair value gap. Another one was an OTE matrix entry. But you could look for liquidity. So I mean, a lot of it was, but that's what I found. That's what we did. Like in the first, you know, the first 30 minutes of this. That's what we did. So if you want to look back in the video and like look at it, I mean the thing is that's my perception on. I think, you know, I said that a couple times. My perception on these markets might look different than what your perception on these markets are, right? So that's something to take of note, because I could have missed something. Excuse me. I could have missed something completely. 100% could have missed something completely, and I didn't even know. But you know, that's okay. Actually, this is cool. Yeah. So just I figure I'll